Hey everybody, how's it going? This is Hartaj Singh with the Biotech Capital Compass June video takeaways. This is Today we're going to be talking about two things that matter if you care about biotech investing: the quiet storm brewing at the FDA and Regeneron stock chart, which lately looks like it went cliff diving. So before we dive in, just want to say thank you again for always listening in, and both to our free subscribers and our paid subscribers. I really do enjoy doing this for a living now. So I do appreciate any and all of you that listen in. Today, calling you from or dialing in from the great state of North Carolina, where I'm visiting my family in our Research Triangle Park area, and going to hopefully be back in New York next week, and we're coming to you from there. So let's dive right in. Let's call the first section FDA in flux. Don't let the calm fool you. First off, let's just talk about the FDA. We spoke recently with Dr. Aileen Clayton-Jeter, a former senior FDA exec, and while most companies are saying everything seems fine, she has a very different take. Here's a short version. Budget cuts are hitting hard. Over 2,400 employees were laid off this spring. Fewer inspections, fewer meetings, and a whole lot more written responses. So what's the translation? If you're a small biotech company without deep pockets and a fully staffed regulatory team, good luck. And here's a kicker: we might not feel the slowdown for another 6 to 12 months. But when it hits, it could jam up pre-market approvals and early stage programs, the exact lifeblood of innovation. I actually asked Dr. Aileen Clayton-Jeter, what are some of the other signals we could be looking for? And she said, along those lines, literally by the end of this year, early next year, start looking to see if there are delays in inspections or other kind of approval steps. But she did remind us on the podcast that these PDUFAs, as they're called, PDUFA, it's an acronym, these are mandated by Congress, and FDA is required to hit them by law. So it's going to be interesting to see what the FDA is going to be doing behind the scenes to maybe try to make sure that this sort of slowmageddon does not happen, that might happen 6 to 12 months from now. Let's talk about prepare now or pay later for small biotech companies. Dr. Aileen Clayton-Jeter's message was clear. Biotech needs to get ahead of this: better submissions, fewer assumptions, budget more time, and maybe stop relying on the friendly FDA phone call to fix your data issues. Because if that doesn't show up, you're stuck. And in this market, delays aren't just inconvenient, they're actually pretty deadly for company share prices or even valuations in the private side. So meanwhile, over in Tarrytown, New Jersey, one of the great biotech companies out there, Regeneron. Let's just shift gears here from FDA, towards Regeneron. And I would say, to you all, that remember when we flagged Regeneron as a solid play back in late 2024. In fact, it was in December 8th, 2024, we wrote an article highlighting Regeneron. What about that? Well, we went and did a pretty deep down analysis in our newsletter as to what happened. Stock is down about a third since then. And that's after another third of a drop last year before we even published our note in December of 2024. So if you held through all this, we salute your patience and your risk tolerance, really do. But what happened? So let's talk about EYLEA, the franchise that couldn't yet. The main problem seems to be EYLEA. In our analysis, at least, it's pretty clear, not just seems that it could be EYLEA is causing these perturbations with the stock. The original 2 milligram version is getting chewed up by biosimilars and Avastin. And EYLEA high dose, what's called the EYLEA 8 milligram version, it's not converting fast enough, at least from a revenue perspective. And without a pre-filled syringe, which still isn't approved, uptake has been, it's been pretty underwhelming. Regeneron's been pretty upfront about it. Their market share has gone down from the high 40s to the low 40s, essentially over the last year in the branded VEGF, anti-VEGF market. So what are the consensus revenue forecasts for the franchise? They're down pretty hard, and Street doesn't think EYLEA will recover sort of ever. At least that's what consensus on Bloomberg seems to be suggesting. Again, you can go to our newsletter where we publish this analysis. So what about the pipeline? It's wide but wobbly for Regeneron. It's broad oncology, immunology, bispecifics, but it hasn't landed a clean win lately. Itepekimab mixed COPD data recently, fianlimab plus Libtayo, big melanoma readout coming in the second half of 2025. So the pipeline's not there yet, but there is potential. There's a lot in it. And in this market, you don't really get credit for broad pipelines. You get credit for results. So, let's talk about Regeneron from a valuation perspective, as we call it, a valuation check. Is it cheap for a reason? Well, Regeneron is now trading at 10 times 2027 earnings. That's down from almost 18 times last year. That's bargain territory for a company with this kind of risk, balance sheet and R&D capability. So again, its PE multiple has gotten shaved literally in half. And actually, if you look at our analysis in our newsletter, we show reduction in revenues for Eylea, the overall Eylea franchise, parallels literally the move down in the stock price. And same thing, EPS reductions, because Eylea is the most profitable franchise for Regeneron. So EPS comes down, for Regeneron, and you can see the share price coming down literally just sort of, just a little bit ahead of when those numbers start coming down. The stock was already reacting to those future projections coming down. So here's the catch with that. Valuation resets don't bounce back until execution does. So this could be a deep value opportunity or just a stock waiting for more pain, or what's called a value trap. So, where does that leave us? We call it either reset or rebound. At least at the FDA, delays are coming. Even if you don't see them, be ready. And with Regeneron, solid science, great people, tough timing, the stock really needs a catalyst fast. And then for investors, really in this market in biotech, execution is the word. Not pipeline breadth, not history, execution. So again, I would say subscribe, share, stay curious, at least with biotech. That's it for this edition of the Biotech Capital Compass. Takeaways, if you found this useful, share it with someone who tracks biotech or is wondering why Regeneron is suddenly on their value screen. See you next time. Take care and stay safe wherever you are.